In the glittering world of precious metals, all that shines is not gold or silver for that matter. Today, we're peeling back the layers of the gold and silver markets to reveal a truth that's been hiding in plain sight. If you've ever wondered why the prices of these metals don't seem to match the buzz you're hearing, you're about to discover the fascinating reality behind the numbers. This isn't just about market trends, it's about a global shift that's happening right under our noses. Let's start with something that might surprise you: the price of gold and silver you see flashing on your screens. It's not telling you the whole story. In fact, it might be leading you down the wrong path entirely. You see, in times of geopolitical and economic instability, which, let's face it, we're living through right now, the price of these precious metals doesn't always reflect their true demand or value. It's like looking at the tip of an iceberg and thinking you've seen the whole thing. But why is this happening? Well, it's all part of a sophisticated game being played by some very powerful players. And to understand it, we need to look beyond the price tags and dive into what's really happening in the physical markets. Now, let's talk about something that's been happening right under our noses: a massive decrease in the physical supply of gold and silver from major exchanges. We're talking about places like COMEX and the London Metals Exchange, the big players in the precious metals game. The numbers we're seeing are unprecedented. Let's start with silver. The London Metals Exchange, their silver reserves are at the lowest levels ever recorded. But that's not all. Over at COMEX, they've seen over 70% of their silver delivery stockpile vanish in just the past 18 months. Think about that for a second. In less than 2 years, more than 2/3 of the silver that was available for delivery gone. Poof, vanished. But it's not just silver. Gold is experiencing the same phenomenon. We're talking about massive quantities being withdrawn from these exchanges. In just one quarter, 400 tons of gold were taken out of COMEX. To put that in perspective, that's about the weight of 65 full-grown African elephants in gold. And here's where it gets even more intriguing. A lot of these withdrawals are shrouded in mystery. In many cases, we don't even know who's buying all this gold. It's like watching a magic show where the magician makes the assistant disappear. But in this case, it's tons of precious metals vanishing into thin air. Now, you might be wondering, if all this gold and silver is disappearing, where is it going? Well, let's connect some dots. Have you been paying attention to what's happening with the BRICS countries? That's Brazil, Russia, India, China, and South Africa. These nations, along with new members like Saudi Arabia, have been on a gold buying spree. China in particular has been accumulating gold like it's going out of style. Russia, India, Saudi Arabia, they're all in on the action. But why? What do they know that they're not telling us? It's all part of a bigger picture, a shift in the global economic landscape. These countries are preparing for something, positioning themselves for a future where gold plays a much more significant role in the world financial system. But it's not just countries that are in on this game. There's another group of players we need to talk about: sophisticated investors. These are the big money players, the ones who can move markets with their decisions. These wealthy and sophisticated buyers are using some pretty clever strategies. They're actually using price suppression techniques to accumulate large quantities of gold and silver. It's like they're keeping the price artificially low so they can buy more without raising suspicion. But here's the kicker: they're not just buying these metals, they're removing them from the trading ecosystem entirely. It's like they're taking pieces off the chessboard and locking them away. Why does this matter? Well, it makes the remaining gold and silver less liquid. It becomes harder for these metals to re-enter the system. Think of it like this: imagine if someone bought up all the houses in a neighborhood and then refused to sell them. Suddenly, finding a house to buy in that area becomes a lot more difficult and potentially a lot more expensive. This strategy is creating a situation where the available supply of gold and silver is shrinking, even as demand is potentially increasing. It's a recipe for a major shift in the market, one that the prices we see quoted every day aren't fully reflecting. Now, let's talk about a major development that a lot of people missed. In 2019, the Bank for International Settlements, think of it as the central bank for central banks, made a crucial decision. They reclassified gold as a Tier 1 reserve asset. This might sound like boring financial jargon, but trust me, it's huge. This decision essentially put gold on par with cash and government bonds in terms of its importance as a reserve asset for banks. The result? Central banks around the world started looking at gold in a whole new light. We've seen a wave of countries repatriating their gold, bringing it back home from overseas vaults. Others are acquiring new gold at a pace we haven't seen in decades. It's like gold suddenly got a major upgrade in the financial world, and the big players are scrambling to get their hands on as much as they can. Let's put some names and numbers to this trend. Since 2017, we've seen some fascinating movements in the gold market by central banks. Germany, for instance, completed a massive repatriation program, bringing back 674 tons of gold from vaults in Paris and New York. That's about $27 billion worth of gold at current prices. Turkey has been on a buying spree, increasing its gold reserves by 250% since 2017. Poland made headlines when it brought home 100 tons of gold from London in 2019. But it's not just about moving existing gold. Many countries are actively buying more. Russia has more than doubled its gold reserves since 2014. China, despite being secretive about its holdings, is believed to have significantly increased its gold reserves. Even smaller countries are getting in on the action. Serbia bought 9 tons of gold in 2019 on the advice of President Aleksandar Vučić, who said he wanted to ensure the country's stability. This isn't just a coincidence. These countries are preparing for something. They're positioning themselves for a future where gold plays a much more significant role in the global financial system. So what does all this mean for you and me? Well, it's a wake-up call. The gold and silver markets are undergoing a massive transformation right before our eyes, but it's happening in ways that aren't immediately obvious if you're just looking at the daily price quotes. We're seeing unprecedented levels of physical metal being withdrawn from major exchanges. We're watching countries and sophisticated investors accumulate vast quantities of gold and silver, and we're witnessing a shift in how the global financial system views these precious metals. The prices we see every day, they're just the surface. The real action is happening behind the scenes in vaults and trading houses around the world. So the next time you see a headline about gold or silver prices, remember there's a lot more to the story. The true value of these metals might be far different from what the price tag suggests. As always, do your own research, stay informed, and think critically about what's happening in the financial world. The game is changing, and knowledge is your best tool to navigate these shifting tides. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell. And let me know in the comments, what do you think about the current state of the gold and silver markets? I'll see you in the next video.